you probably didn't notice it. While everyone's been watching crypto, Wall Street, and Silicon Valley, another revolution has been unfolding quietly in the background. A revolution that could change how you bank, borrow, save, and invest without you even realizing it. It's called open finance. On the surface, the term sounds boring, like something buried in a policy paper. But in reality, it's one of the most disruptive shifts in money since the invention of the credit card. Why? Because open finance flips the power dynamic. For decades, banks and institutions controlled your financial data. They decided what you could see, what you could do, and how much you'd pay. But open finance unlocks that vault and hands the keys back to you. It means apps that talk to each other, accounts that connect seamlessly, and financial tools that finally work for you instead of against you. It means more transparency, more competition, and more control in your hands. And here's the shocking part. The revolution is already happening. Every time you connect a budgeting app to your bank, every time you send money with Venmo or PayPal, every time a new fintech startup promises easier credit or smarter investing, you're living in the age of open finance. The question is, will you use it to your advantage? Or let the system keep using you? So what exactly is open finance, and how does it work? At its core, it's about access to your own data. For decades, banks kept your information locked away. Your spending history, your payment records, your loan details, all hidden behind closed doors. If you wanted a better loan rate or smarter budgeting tools, you had to beg the bank for help and usually pay for it. Open finance changes that. Through secure digital connections, often called APIs, your data can move where you want it to go. That means you can give permission to apps and services to use your information in ways that benefit you. Think about your daily life. A budgeting app that automatically tracks your spending across every account, not just one. A savings tool that rounds up your spare change and invests it without you lifting a finger. A lender who instantly sees your financial health and offers a lower interest rate, because they're competing for your business, not relying on you staying in the dark. This is the secret revolution. When data flows freely, power shifts. Banks no longer hold all the cards. You do. And once people taste that kind of control, they don't go back. But with power comes risk, and the next part of this story reveals why not everyone wants open finance to succeed. Not everyone is cheering for open finance. For decades, big banks and financial institutions thrived on control. They made money by keeping you dependent on their products, their systems, their rules. If you wanted a loan, you went to them. If you wanted a credit card, you played by their terms. If you wanted financial insight, you paid their fees. Open finance threatens that model. Because once your data is free, competition explodes. A new fintech startup can offer you a better loan. An app can analyze your spending and find ways to save you hundreds a year. A robo-advisor can build you an investment portfolio in minutes for a fraction of the cost of a traditional advisor. Banks see the writing on the wall. Some are adapting, embracing open finance to stay relevant. Others are fighting it, warning about security risks, lobbying against regulations that force them to share data, or quietly making it harder for third-party apps to connect. But history shows us something simple. Revolutions rarely stop once they begin. Consumers don't give up convenience. Once people experience real control over their money, they demand more of it. And that's exactly why open finance feels less like an option and more like inevitability. Still, with change this big, the question isn't just who wins. It's also who loses. So what does open finance actually mean for you? The everyday person just trying to manage bills, debts, and maybe build a little wealth. First, better choices. Imagine shopping for a loan the way you shop for flights. Instead of one bank dictating your options, dozens of lenders compete for your business in real time, showing you the lowest rates they can offer based on your true financial picture. Second, lower costs. Budgeting apps, automated savings tools, and investment platforms powered by open finance slash the fees that traditional banks once charged. What used to cost you hundreds a year in hidden charges can now be done for free or close to it. Third, smarter insights. With all your accounts connected, apps can show you exactly where your money leaks away each month and how to plug those holes. It's like having a financial advisor in your pocket, available 24/7. And finally, access. Millions of people who never had bank accounts or credit scores can now use open finance tools to prove their financial reliability, unlocking credit, mortgages, or opportunities that were once out of reach. This isn't theory. It's happening already. Every time you see an app helping someone save automatically, invest spare change, or get approved for credit without mountains of paperwork, that's open finance at work. The revolution is real. The only question is whether you'll harness it or ignore it. Of course, every revolution comes with risks, and open finance is no exception. The very thing that makes it powerful, the free flow of data, can also make it dangerous. When your financial information moves across apps and platforms, the question becomes, who's really protecting it? Privacy is the first concern. In theory, you choose who gets access to your data. But in practice, many people click accept without reading the fine print. Some apps may sell your information to advertisers, or use it in ways you never intended. Then there's security. Banks spend billions protecting against hackers. Smaller startups don't always have that luxury. A single breach could expose sensitive details about your income, debts, and spending habits. And let's not forget manipulation. If every app knows your financial weaknesses, what stops them from nudging you into loans or products that benefit them more than you? Open finance is like fire. It can warm your home or burn it down. The tools are powerful, but they demand responsibility from both the companies building them and the people using them. The challenge is finding balance. How do we unlock the benefits of transparency without sacrificing control? Because the line between empowerment and exploitation is razor thin. Governments and regulators can't ignore open finance. The shift is too big, too fast. But their reactions couldn't be more different. In the UK, regulators pushed hard for open banking, laws that require banks to share data when customers request it. The goal: spark competition, give consumers more choice, and force institutions to treat people fairly. In the European Union, similar rules are spreading, with a focus on transparency and security. The idea is simple. Your data belongs to you, not the bank. Meanwhile, the US has been slower to move. Innovation often races ahead of regulation. Some lawmakers see open finance as a way to unlock opportunity for millions of Americans left out of the system. Others warn about privacy, exploitation, and the risk of handing too much power to tech companies. And then there are countries that fear open finance entirely. For them, too much transparency threatens the dominance of state-controlled banks. The battle isn't just about technology. It's about control. Who owns your data? Who gets to profit from it? And who protects you when something goes wrong? The answers will decide whether open finance becomes a tool of liberation or another way for institutions to tighten their grip. And while governments debate, the revolution doesn't wait. Every day, more people download apps, share their data, and step into this new financial frontier. The question is, will the rules catch up in time? So what does the future look like if open finance keeps growing? Picture this. It's payday. Instead of waiting 2 or 3 business days for your check to clear, your wages hit your digital wallet instantly at midnight. No delays. No fees. Your financial dashboard, a single app on your phone, shows every account, every loan, every investment in one clear view. It highlights where you overspent last week, nudges you to save more this week, and even suggests cheaper insurance or a better mortgage rate. Need a loan? You don't go to one bank and beg. Dozens of lenders compete for your attention in real time, each showing you their best offer, tailored to your actual financial health. Investing? It's automated. Spare change from your morning coffee invests in a diversified portfolio without you noticing. Retirement planning runs in the background, adjusting with every paycheck. Even big life moments shift. Buying a house could take days instead of months, as lenders instantly verify your income and spending history through secure data sharing. For the average person, money becomes less about stress and more about strategy. Transparent, seamless, automated. That's the promise of open finance. A world where financial systems finally work for people, not just institutions. But remember, revolutions come with trade-offs. And the more efficient the system, the more tempting it becomes for others to use it against you. But every bright future casts a shadow. The same tools that make life easier can also make it more controlled. When every detail of your finances is visible, your income, your debts, even how often you buy fast food, algorithms can start making decisions for you. At first, it feels helpful. Your app nudges you toward healthier spending. Your credit score updates in real time. Your bills are paid automatically. But what happens when those nudges become limits? When a lender denies you not because of who you are, but because an algorithm decided you don't fit the model? When a platform predicts you're a risk and quietly shuts off opportunities before you even apply? And what about privacy? If dozens of apps know everything about your money, your life is essentially mapped out in data points. Where you shop, what you value, how much you're worth. That information is power, and not always in your hands. The danger isn't just losing control. It's forgetting you ever had it. Convenience can be addictive, and slowly, you may trade freedom for simplicity without realizing the cost. That's the paradox of open finance. The more open it becomes, the more vulnerable you might be. So the real question isn't just what open finance can do. It's whether we'll stay in charge of it or let it quietly take charge of us. Here's the truth. The open finance revolution isn't coming. It's already here. Every app you connect, every account you link, every transaction that flows seamlessly between platforms, it's proof that the old walls are coming down. The vault is opening. The control is shifting. The question is, shifting to whom? Will it shift to you, empowering you to save smarter, borrow cheaper, and invest with clarity? Or will it shift to algorithms and corporations, leaving you more exposed than ever, your choices quietly shaped by systems you don't control? Revolutions rarely announce themselves. They happen in small, invisible moments until one day, the world feels different. That's what's happening with money right now. And just like every revolution in history, this one demands awareness. If you ignore it, you risk being left behind, or worse, manipulated. But if you embrace it with eyes open, you can ride the wave instead of drowning in it. Open finance is neither good nor bad on its own. It's a tool that can set you free, or one that can quietly trap you. So as this revolution unfolds, remember, the power of your money has never been more open, but whether it truly belongs to you depends on what you do next.